Good afternoon. I'd like to welcome everyone. We're going to begin the Bellingham City Council's Finance and Personnel Committee. Joining me on the committee are Council members Jean Knudsen and Terry Porneman. We have 3 items before the Finance and Personnel Committee today. The first item is an ordinance to amend the 2014 Information Technology budget by reclassifying one position. I see before us the Director of our IT Department, Ms. Mulholland.
Good afternoon, Council. Marty Mulholland, IT Director. The purpose of this ordinance is to reclassify one position in the budget. That is an action that requires Council approval. The position is the Applications Manager for the IT Department. We budgeted it at an estimated classification, and upon analysis, a recommendation is changed to make it a standalone classification. The purpose of the position is to supervise 9 senior staff members in the IT department and coordinate strategic planning and management of our software systems applications. That includes our financial systems, our utility billing systems, and our databases. So these are fairly senior personnel. This position existed in the past, but was eliminated for budget savings purposes and was reintroduced in the 2014 budget with an effective date of July 1. So we're recommending your approval of this classification change.
So moved.
Okay, I have just one question. It says we're deleting a position. That is a department manager position and instituting this in its place. Would that have been like an assistant director under you or something? Was it ever filled?
It was filled in the past under that former Department Manager 1 classification, but given reorganization and analysis of the updated job description, it moved to a standalone classification. It is not an assistant director. It is a manager of 9 senior positions.
Okay. Any further discussion from the committee or council members? Nope. We have a motion to recommend passing this ordinance tonight to approve this budget reclassification. All those in favor, signify by saying aye.
Aye.
Aye. Opposed? We'll bring it forward the recommendation tonight. Next item before us is our 2014 first quarter financial report. City financial guidelines actually require our finance director, Mr. Brian Henshaw, to make quarterly financial reports to the City Council. This report is to provide an overview of the financial activity for the first quarter. The monthly financial statements will be available, or maybe already are available, on the city's website. Mr. Henshaw.
Okay, good afternoon, Council. Brian Henshaw, City of Bellingham Finance Department. Today's presentation is just a summary, and so the complete March financial statement is on the website along with the presentation, or will be there shortly. Today I'd like to just talk briefly on the national headlines, economic indicators. Most are mixed. They're changing daily. There's a lot of uncertainty in the market due to the Federal Reserve's impacts on the market, also other central banks and the geopolitical risks that the world is facing today. On the good note, positive note, jobs and unemployment numbers are improving. Lower unemployment numbers. Retail sales, however, are softening and weakening, and for the first 3 months of the year they blamed that on snow and bad weather, but that's kind of running its course. Locally, we have some of the same mixed numbers. A positive one, we're about 2,000 jobs higher starting out the year in Whatcom County for non-farm jobs over last year. So you see this increase here. That's a good indicator and positive start. That's one of the positive indicators. Another one is our permit activity. The first quarter permit activity so far is up 18% over last year to 43.4 million. On an annualized basis, this should exceed last year's $140 million worth of permit activity. You can also see that there's a good diversity of mix. This is single families right here, and that's a small increase, multifamilies, and then we have commercial, industrial, and mixed-use buildings, and then we have all other commercial alterations and all other activity up here. So that's another positive indicator. It's a good leading indicator for all city revenues. Citywide revenues are up from $46.2 million in 2013 first quarter to $47.6 million this year. That's a 3% increase. Basically across the board increases other than grants and entitlements here, which is slightly below where we were last year. I think this has more to do with timing. We do accruals at the end of last year, so all of the activity up through December is accrued, and then we get reimbursed on a quarterly basis for a lot of the grants. So even though that revenue comes in at the beginning of this year, it would be put back into last year's revenues. But we'll continue to watch this as we go forward. Right now, we're entering the construction season from March forward, and so this is a little bit dated as far as the numbers, but we're going into the construction season now. On the expense side, overall citywide expenditures are down from last quarter, $51.1 million in 2013 to $47.3 million. It's a decrease of 5.6%. But you'll see it's all right here in the capital. This is the wastewater treatment plant expansion. Last year it went through $30+ million of construction. That project is now towards the end of its billing and construction cycle, where they're doing more of the installation and testing. So there's a longer time, but less expenses are going through the city. Overall operation expenses are up $1.1 million or 3%. Now I'll just touch upon the three major enterprise funds. First, street. Street revenues down 1% in the first quarter. You'll see that fuel taxes are flat. This is 2013, 2014, and then budgeted for 2014. Overall, not much changes here. The two things I'd highlight is grants. We've been very successful in getting a lot of street construction grants. Obviously, they haven't started yet, but those are on the books. And some of these are longer lead times. So the one you talked about in TBD, it'd be a project that's been engineering 1 year and constructed the next. James Street is the big project that's coming online here, and we have several others that are in the budget and proposed for the next year. Sales tax is slightly below last year. This is due to the budgeted allocation change that was approved last year as part of the 2014 budget. Street expenses up approximately $1 million over last year. And even though $500,000 of it is in capital projects that were done in the first quarter, so you see, though, that we got a long ways to go. There's over $17 million of street projects in the capital this year's budget. Next fund is water revenues. Overall, the major change here is the difference between unmetered to metered. You can see where this was 2013 revenues for unmetered. 2014 revenues are decreasing. This is due to the 3,500 meters that were converted over on January 1st. So that revenue now is down here, where you had 2013 in metered, and 2014 now is an increase here. The other point I'd make about metered revenue versus unmetered revenue is that this is much more variable. So as we convert people over, seasonality is going to come more into play as far as the revenue throughout the year, and also as people get their bills and they see their consumption and their uses, they can make a direct impact and reduce that, and so that can also change our revenue forecasts. On the expense side, first quarter water expenses are down $600,000 from last year. We have some due to capital here, and this is the water fund, so it also involves land acquisition. So we have a lot of land acquisition and capital in the water fund expenditures that are budgeted that haven't taken place yet. We also have some changes just in the accounting changes I mentioned before about the BARS, which is the budgeting accounting reporting system put out by the state. Last year we had to implement several changes, so we have some category changes that you'll see today that attribute some of the differences. The next enterprise fund is sewer revenues. Sewer fund is a small decrease in revenues. It's $4.6 million for the first quarter. This is down 1% from last year. The miscellaneous income is mainly due to interest. So we took out $56 million worth of bonds to pay for the wastewater treatment plant expansion. A lot of that was then put into reserves. It was earning interest. As we've spent that down, we'll earn less interest under our reserves and our investment portfolio. You also see the change from metered to unmetered. And part of this, even though revenues are down slightly with an increase in rates, we had to change a little bit of the billing cycles. So even though it's billed every 2 months, that varies a little bit. And when we converted people in January, we extended one period and shortened the other. So there was a very small variation. So that is probably explaining some of the difference between last year and this year here. On the sewer expense side, sewer expenses are $5.1 million less than last year. All of this is due to the capital in the wastewater treatment plant. All other expenses are slightly higher than last year, and operations are flat in the sewer fund. Please ask any questions as we go to. Next is the general fund revenue. This is seasonally adjusted, so you see the two big spikes are for property taxes. This is the March one just before that. We started out the year very strong, ahead of forecast, and then every month since February and March, we've actually been a little bit slower, a little bit lower, and right now we're just under the seasonally adjusted forecast for revenues for the general fund. This is a little bit of the detail there. I've shown each of the major components up at the top. This is the revised budget, where we are year to date, seasonally adjusted forecast, where we are actually, and then a negative here is in red with parentheses, and it's either favorable or unfavorable. Property taxes, we are caught up now. I have early numbers for the other months since March, so I know that we'll catch up on that one. Sales tax is a concern. We are basically 1% over last year on sales tax. So right now in March numbers, we're just above on the seasonally adjusted. And business tax is the same. We're slightly above in business tax. It's only 2% for the year over last year, though. So definitely seeing slowing in the economy, and I'll go into a little bit more detail there in a second. Utility taxes is always a variable. It depends on the weather. We had a very mild winter again, so electricity and gas usage and then taxes are lower. We can make up some of this on next fall as we go back into the winter, and also the utility companies have increased some of their rates, so I expect that this will come more in line as we get into the rest of the year. The only other note here is charges and fines. We had some less activity in traffic infractions are down year to date, and also interest earning as the yield continues to go down on our investments. Both of those contribute to some of this. But I just want to point out it's a good thing that we have diversified revenues, because some are positive, some are negative, and I anticipate that that'll continue for the rest of the year. We'll continue to watch it. Sales tax. I told you at the 12/31 fiscal financial report, general merchandise is a concern. It is down 10.3% from last year, and clothing and accessories, the other one here, is down 15%. Luckily, food and drinking establishments, auto parts, and wholesale are up, so we are still slightly positive, like I said, 1% for the year. But this is a growing concern. It's been down for 4 months now, partly attributable at least to the Canadian dollar and Canadian shoppers. But I also think discretionary spending, people are being more conservative, maybe spending a little bit less. Construction is another strong part. We have construction and building materials. Construction's down slightly in this, but actually building materials is up, so it's overall is positive. On the expense side, this is by department. Again, it's a forecasted expenditures. You'll see this is the revised budget, where they should be historically and to the forecast, where we are actually, and then a positive or a negative here. I will point out that all departments are below budget. They're all below 25% for the first 3 months. The only exception to that is IT, which pays for a lot of the computer software maintenance agreements, and those happen in the first quarter. So that's on the higher side. Where you see a negative here, it just means that it's ahead of forecast. So this is based on a forecasted number on historical expenditures. This is variable, so it's only a proxy. So overall, we're doing all right on the expense side. Another way to graph this is just last year compared to this year. You can see the increases here. All departments are more than last year. We're up $900,000 or 6% year over year. HR, let's see, council and finance and fire are the ones that are either at or below last year's expenditures. Everybody else is slightly up. And this is general fund expenditures by category. You see here where it's almost invisible, principal and interest and capital. But we do have intergovernmental expenditures, services. Most of the general fund is made up of salaries and benefits. This has grown over the last several years from 68 to 70% of the general fund budget is spent on salaries and wages and benefits. Sorry. Any questions on that? Okay. The last slide here is our investments. I touched upon this for the reserves and the wastewater treatment plant. At the end of March, we had $146.6 million invested. This is the breakdown. The state investment pool is basically a money market, very short term, less than a year. And then we have callable bonds, federal agencies, municipal bonds. This is the historical yields and return that we've gotten on that. And this is us, the benchmark here. We're at 0.88%, less than 1%. And compared to our benchmarks, which is a state pool down here, they're at less than 0.1%. So we're doing all right, but this is one of the areas that has decreased over time just due to the investment markets out there. So that's the end of the financial presentation for March. If there's any questions, I'll take them now, and then I'll go on to a couple other slides I prepared for the budget policy decision next. So is there any questions on that? Okay. So what I put together here is an average return, the percentage increase for the four big tax revenues that we have: property tax, sales tax, B&O tax, and the utility taxes. 2008 was the peak, and so I've taken the four-year average from 2009 forward. And you'll see over here on the right that property taxes, basically on an average basis, has increased 3.3%, sales tax 5.6%, B&O tax 3.5%, utility tax. Those have continued to go up, whereas all other revenues have barely grown at all. You'll see here it was $19.3 million. One of the big ones here was interest. In 2008, we earned $900,000 of interest. Out here in 2013, 2014, we're at about $170,000. So luckily, we've had good growth here in the top four revenue sources. We've barely held it here. And so overall, actually since the peak and then the first recession year here, through last year, we've grown 2.5%, which is pretty respectable, actually. When you compare it to our average expenses, though, you'll see salaries and wages, and I did the same thing here. This was our peak year, 2008, so 2009 was a negative, so I started here and went forward for these 4 years. So again, it's a four-year average, salaries and wages, 2%, benefits, 4.4%, supplies, 6.4%, and then all others, 4.1%. So all of our expenditures continue to go up at a faster rate than our revenues. At the bottom here, I added the budgeted revenue, our budgeted number of employees, and then the average cost of employee. So you'll see back here in 2008, we're at $78,500 per employee. This has grown every single year, 4.7%, $95,305 per employee. Now this is average, so it's total expenditures to the city, salaries, benefits, wages, taxes, all those things, total inclusive. I want everybody to understand what's included in that number, strictly divided by the budgeted number of FTEs. So it's not scientific, but it's mathematical, and it's consistent throughout that. So when you combine those two things, you've seen this graph before. This is the general fund. The top line here is our expenses, and it's growing. This is actual up through 2013, and then the adopted budget and forecasted out in 2015. Here's our revenue lines using those same assumptions that we just went through. And you'll see what's happened to our reserves as we spent down reserves. And this is our 12% reserve target. So out here, we're going to hit this target line if we continue along this path here. So that's something to keep in mind for this afternoon. Other budget considerations, I touched upon these before, but revenue growth is definitely slowing, and even in the growth years, this is not enough to outgrow our expense lines. Environmental remediation is going to be another presentation here in just a few minutes. We have $30 million of environmental remediation total cost to the city. Annual maintenance, we've estimated this to be $1 million citywide annual maintenance that we have not been doing. PFD debt service. The forecast right now is about 2019. The city will need to start subsidizing the PFD debt service because the bond payments will exceed the revenue generated under the PFD program. And then the fire and police pension, this is $30 million of unfunded liability for fire and police pension for long-term care, medical, and also the pension for the left one police and fire departments. Any questions?
Committee? Other council members? Brian, thank you. Thorough job as usual. You've given us a lot to think about as we go forward this year. We'll go on to the next item. The third and final item for the Finance and Personnel Committee is an ordinance and resolution. Actually, I have to have a question about that to you, maybe, Peter. An ordinance and a resolution authorizing the city's acquisition of 6 ambulances. So before we start, there are 2 items in here. One's an ordinance and one's a resolution. Would it be best if we had actually 2 separate motions and recommendations on those items separately? Okay. So, Mr. Henshaw, are you going to introduce this one as well, or Fire Chief Newbold?
Yep. Still Brian Henshaw, Finance Department. Bill Newbold has been before you several times to talk about the ambulance purchase. We're basically purchasing 6 basic life support aid cards. We are using a new financing tool, which is through the state, and instead of issuing bonds to make this purchase ourselves, the state twice a year allows all municipal governments to package up all of their equipment and land purchases. You submit a letter of intent, which I did back in January. Then in June, they take all of the qualified municipal governments and their purchases and package them up, issue bonds, and we get their bond rate, which happens to be about the same as ours right now, but it saves us the bond issuance cost. So last year was 2.61%, and their paper requirements are what are before you, and we do need votes on both the reimbursement resolution today and the authorizing ordinance. The resolution basically is saying that the council supports our application and will reimburse and pay back the state for the 6 ambulances not to exceed $1 million. And then the ordinance is naming the 3 people that will proceed, which is Bill Newbold, the mayor, and myself, to complete any and all other paperwork that the state needs, and so that we can complete this transaction in June, and then we will receive the money in August. And then Bill's here to talk more about the bid process on the ambulances, if you have questions.
Chief Newbold?
Bill Newbold, Fire Chief. This is information, as Brian Henshaw had mentioned, that we brought together in front of you a couple months ago, and then also earlier this month. We are moving forward with Braun Northwest, a reputable manufacturer, one that we've used previously in the past and been very satisfied with. Braun has a lot of ambulances throughout the Pacific Northwest and across the country. Very accessible to us and also very responsive to any needs that we've had with our current fleet. And through the process, they were able to put together a package for us that meets our needs. These ambulances are a little bit smaller. We discussed that last time. The box itself is a little bit smaller. These will be for basic life support, not the advanced life support. And by nature of some of that work and the transport capabilities, we're able to go with a smaller box unit and realize some cost savings there.
Committee, any questions?
No, but I move approval of the resolution.
Okay, we have a motion for the approval of the resolution. The resolution is in support of the city ambulances application. It basically says that we believe we have the revenues and will be able to make the payments on the $1 million bond. Any further Actually, I have a question first. According to the documents, the estimated loan payments will be approximately $115,000 per year for the 10 years. What is the source of that? Is this a general fund supported expenditure?
Yeah, correct. So the difference, and Jack raised this point before, is that usually the fleet fund would make the purchase, and then the departments end up paying not only the purchase price of a vehicle, but also the replacement cost. So we are diverging from past practice a little bit on this. This is kind of a test run trial, and the budget will come from the general fund through the fire department, and it's over a 10-year period. So at the end of the 10 years, we'll own the ambulances, but they will not have paid into the replacement fund. So at that time, if all the vehicles need to be replaced, we'd have to do another type of funding mechanism to do that at that time.
Why do we feel comfortable not paying into the replacement fund for these particular aid cars? Or are we just trying to take advantage of the good financing?
So it's a philosophical as far as 100% replacement means that the fire department would pay basically $240,000 next year instead of the $115,000. So they're buying into the replacement, so at the end of that time period we would have it. As over the years, the fleet fund replacement portion continues to increase, and we don't believe that that's the best use for city money to just continue to increase and increase and increase. So we're going to try it with this one, but also move towards a not 100%, but that fund would cash flow all of the required purchases in any given year, but not have 100% replacement at the end of it. It's the way it used to be, actually, going back to when I first started here about 2005, 2006.
So to simplify, is this approach here more as a pay-as-you-go approach, whereas the other approach using the fleet fund and pre-funding replacement is, I don't know, not pay-as-you-go, but whatever the other option would be?
Correct, yeah.
Okay. Okay, is there any further discussion on this? All those in favor of the resolution, signify by saying aye.
Aye.
Opposed? Okay, we'll bring forward a recommendation to approve the resolution. We have another half of this particular agenda item.
Second.
We have now a motion to authorize the ordinance, which is basically to authorize agents of the city to complete the paperwork for this loan. Any further discussion? All those in favor, signify by saying aye.
Aye.
All those opposed? Okay, I'll bring both of those items forward with a positive recommendation tonight. That's the last item before the Finance and Personnel Committee. There'll be a brief break, I believe.